Greetings, members one and all of the Salivation Nation. Gold and silver are dropping, and so are the markets. Let's explore why. Yes, indeed, this is a look at the gold and silver prices from Kitco. It looks like gold has taken a $28.60 hit as of the recording of this video, down well over $1,900 an ounce now, almost a 1.5 point drop in the price for gold. But silver has lost 4%, over 4%, down a whole dollar. Platinum has lost as well, and so has palladium. And we're going to find out why. Here is an article from Market Watch that gives us some clue here. Gold futures end lower, retreating from their highest levels in 2 weeks. Gold futures finished lower on Tuesday, a day after settling at their highest in just over 2 weeks on the heels of a weaker U.S. dollar. Investors continued to keep an eye on the moves in the dollar as well as prospects for additional stimulus from Washington, but that was soon upsetted, and that's what we're going to talk about here. Gold price consolidation continues, said Will Kai, partner at Wilshire Phoenix. Prices have been resilient with fundamentals supporting factors still in place, he said in emailed commentary. Some of the underlying drivers are themselves in retracement consolidation after overextension, including real interest rates, thus affecting gold price. General bullish macro conditions are still in play for gold in medium to long term, such as economic uncertainty and inflation expectations, he said. Gold for December delivery fell $11.30 to settle at $1,908.80 an ounce on COMEX. Prices had tacked on 0.7% on Monday to settle at $1,920.10, the highest for a most active contract since the 18th of September, according to FactSet data. December silver prices fell 64 cents, now $1 an ounce, giving the up more than 2.2% climb from a day earlier. The dollar, as measured by the ICE US dollar index, was up 0.25%, fell Monday, and was little changed in Tuesday's dealings. A weaker dollar is seen as a positive for gold and other commodities priced in dollars, making them less expensive to users in other currencies. A rise in Treasury yield, though on Tuesday, was seen as a negative for gold. Falling yields have contributed to the metal's gains this year, reducing the opportunity cost for holding non-yielding assets like commodities. It would likely take a big rebound for the dollar and a slide in government bond prices or a sustained rise in yields to spark sharp gold sell-off. Well, something else happened today that this article is not talking about because this broke just before the recording of this video, and that is the President Donald Trump has said he is not going to be doing any negotiations with the stimulus until after the election. For yields to rise sharply, the Fed would have other central banks will have to drop their dovish views and start tightening their belts. So it all boils down to the economy. But right now, or the foreseeable future, the global economy is not in a state that requires tighter monetary and indeed fiscal conditions. Interesting. On Tuesday, Federal Reserve Chairman Jerome Powell reiterated his belief that the U.S. economy needs more fiscal support. Even as the recovery from the pandemic has been strong thus far, the recovery will be stronger and move faster if monetary policy and fiscal policy continue to work side by side to provide support to the economy until it is clearly out of the woods, he said in a speech to the National Association of Business Economics. Well, in my mind, the economy will move faster once the economy is opened up again. And we are seeing improvements in many aspects of the economy because of some opening up in some states, but it needs to open up more in other states, I believe, in order for it to really, and I think that's what's going to do it. In other COMEX metals trading, December copper was down a little bit when it talks about platinum and other metals there. But very interesting indeed. Part of this problem is the COVID-19 virus still is making its way through and having some surges in some states, while other states seem to be getting a bit better. We'll see how it plays out, but nonetheless, it is concerning to see that it's still something we have to deal with. But nonetheless, I think we've gotten to the point where treatments are starting to make inroads, and the president now is out of the hospital. But this whole news that broke this afternoon about Donald Trump saying, forget stimulus, talk about stimulus. And that does two things. Based off of Jerome Powell's statement that he thinks is going to take more government stimulus to get the economy moving, as opposed to the private sector, private enterprise doing it, well, the markets reacted and started dropping pretty substantially. But gold and silver dropped too, because that means that, well, the dollar is going to be strengthening. In other words, we don't have to worry, at least for now, about any kind of more printing of money and more stimulus out there that's going to dilute the value of the dollar. So therefore, they can relax a little bit. I think these price drops are just temporary, though. But, that's the way the news cycle works and the way the markets work. They react based off of information you get in an instant. And easily these things can change on a heartbeat, and prices move up and down. And hence the volatility of both gold and silver in these times. And that's what you're seeing here when the price moves downwards. That means that this could be a buying opportunity if you're so inclined. But as I've always say, I always caution against making such statements because you don't know what the market could do tomorrow. We could see another $30 drop in gold tomorrow, or $1.50 further drop in silver tomorrow. You just don't know. So you have to weigh your purchase decisions based off of your personal situation, if you can afford to make a purchase, and your ability to make a risky purchase, considering where the market has been and where it will go, and the unpredictability. Because really, in a sense, that is the key. The markets are unpredictable. And I was a little bit surprised to see the prices drop on that news, because more than likely after the election, some sort of deal will come together no matter who wins the election. So we'll see how this plays out for sure. It's very interesting indeed. And it is fascinating. But I think the one thing we can take from this, and one thing that does hold true, even though we did see this drop today, make no mistake, the metals will hold on. They still maintain their power to be able to protect you against an ever decreasing and depreciating dollar that occurs. Even though you're not seeing it necessarily with today's price movement, because the dollar index is what rules the roost in the marketplace. But in the physical, I think it's a little different story. And I think that's why we are seeing the premiums as such, because of the demand for the metals. And people understand it. For those that hold the physical, and that is why I think you're seeing some of the prices move up where they're at. When you're talking $2-3 premiums for generic silver, and on a regular basis we're seeing 4 or 5% premiums on gold. That is where we are at now. So it'll be interesting to see how this plays out and see what tomorrow looks like with the markets and with that news. How long will it take for this to digest? Could there be a recovery of these losses tomorrow, when the markets realize that one thing that is obvious and for sure is that this is just temporary? The Federal Reserve will continue to liquidate, will continue to print money like it's going out of style. They'll do it behind the scenes. They'll do it in front of the scenes. They'll codify it with legislation. That's one thing that's for sure, is the debt will continue to rise and the deficit will continue to march on as it has and as we see and talked about in prior videos. So there you have it. So post your thoughts below on this news. The market's down, gold and silver are down, and it may be an opportunity if you are so inclined. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.